Thank you for joining me. I'm Alex, and I would like to talk about Caterpillar. And no, I'm not just making this video so people who search YouTube for cat will find my videos. So what they do is construction equipment and mining equipment, mainly like backhoes and, dump trucks and all kinds of ginormous trucks. So current price is $130 and the market cap is $73 billion, which means they are very global and there is cat equipment literally all over the world. Current dividend yield is 3.14% with a payout ratio of 32%, which sounds very promising. Revenue $55 billion, which is up 20% from the previous year, which is obviously amazing. And earnings of $6 billion, which is up 800%, which is just weird. So earnings development goes from the previous year. Last year was ended at December 31st, 2018. So the previous year was $750 million, and they went from there to $6 billion. The year before that, they actually lost money, and the year before that was actually quite decent. So the earnings growth is obviously amazing, but not 800% amazing. It kind of went downhill for a while there. PE of slightly over 12, which is obviously also amazing. So total assets $79 billion, total liability $64 billion, and total stockholders' equity of $14 billion, which all went up 2%-ish. So to sum that all up, the recession obviously makes people build less stuff. And there is a huge lag behind recessions and building stuff, because during a recession people stop building stuff, but when the recession ends people are not sure and they don't know if they want to build a new factory and whether or not there's growth right now, and so they tend to wait a couple years and then decide to plan to build stuff, and then decide to get permissions to build stuff, and then actually start building stuff, and so it drags on and on. So obviously right now we're out of a recession and we're far enough away from a recession that people are actually building stuff and that people are actually buying new equipment to build stuff. So right now is a good time to buy Caterpillar, especially at a PE of 12. And so talking about risk factors, there really are not a whole lot. So there's one other company that I can think of that also builds similar stuff, which is Volvo. Obviously, there are some smaller companies kind of sort of getting into this, but there's no major global player that actually does the same stuff as Caterpillar. So I don't think there really are any major risk factors right now. And as such, I think that Caterpillar as a whole is a very safe company because people are going to build factories for the foreseeable future. So to sum that all up then, PE of 12, obviously amazing. Okay, I wouldn't say amazing, but it's very good. Revenue growth of 20%, obviously amazing. Dividend yield of 3.4% is obviously not terrible. So all in all, that's pretty nice. So for growth investors, I still don't think Caterpillar is really the company for you, even though globally there's two countries that are growing fairly quickly and building factories and all that kind of stuff, and that is China and India, the countries with the biggest populations. So I think there will be growth, but there will not be enormous growth. So I think growth investors are kind of out here. Dividend investors, I think this is a very strong company to look into, and I think that you should be doing your research, and actually with a payout ratio of 32%, I think this is going to be an amazing company. So dividend investors, I think, should look into this, and value investors, a PE of 12, a balance sheet that's pretty nice, a dividend yield that's pretty nice, and revenue growth that's all pretty nice, I think that Caterpillar is really a strong buy right now for pretty much anyone but growth investors. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.